Louise, what was her name? She was on soap for a while. I can't remember. Ready?
Yeah. Yeah, you got it.
So I gotta get it off at
10 after.
10 after 9. Okay. Ready? Let's do it. 3, 2, 1. And good evening, good afternoon, good morning, wherever you are in podcast land. Brendan Cunningham here, the real estate doctor at EXP. With me today, as always, my partner, my co-host, my favorite guy is Matt Paul, because he does it all. We have a special guest dropping in today, but before we get to that, last week we talked about a lot of things. To continue the conversation as we always do, remember this: if you're looking to hear what you want to hear, turn us off right now, because you're not going to hear what you want to hear. We're going to tell you what you need to know. This is the real story.
Full transparency.
Full transparency. We're not going to mix words. We're not going to tell you what you want to hear. We're going to tell you what you need to know. So, based on that, we talk a lot about some of the people that support us on our team. They're sort of like, if you want to use a football analogy, there's 11 guys on the field, but they have teams within teams. There's these special teams.
Yes.
I love the special teams guys. I understand we got a new special teams coach coming in.
Those do, yes.
Okay,
Yeah,
Mary,
about that.
special team. So within our team, we had a guy last week, a couple of guys, the guys with the capes, the exterminators.
Yeah, yeah.
They talked about,
Freedom
you
Force.
got to maintain your property. What was that?
Freedom
Force. They had
Freedom
capes.
Force
This is very
Festival.
scary. And another integral part of our team is the mortgage aspect of the transaction.
Absolutely.
Not all transactions are cash transactions. In fact, most of them are not. However, there are a lot of cash transactions out there. We can talk more about that with our special guest star dropping in from the #1 mortgage brokerage in all of Western New York, and that's a story in itself. Premium Mortgage with us this morning, this afternoon. It's actually this afternoon.
Yeah, right.
In beautiful downtown Buffalo. We're waiting for the snowstorm to hit tonight.
Yep.
I'm ready. But come on down, drop in from out of the sky, Mike Kozlowski. Yay! Let's get the crowd.
Welcome, Mike. Hey, guys. Thank you for your time.
Thank you.
It's all good. All right, so how the heck did Premium Mortgage get to be the #1 mortgage brokerage in all of Western New York when, historically, in any market, if you have a very, very productive mortgage company, they're usually tied into a large real estate company. This is not the case. You are totally independent.
Correct.
Right. And the other guys who may have 1,000 agents feeding them on a regular basis, they can't compete with you. I say, what's that all about? So let me ask you, because you'll know the answer.
I guess it would start with, first thing I would say is we get stuff done.
You know
I
what?
mean, it really-
That's why I use it, because and I don't
I
have to
agree.
think about it. It's one less thing I have to think about.
We have an incredibly talented sales staff. Our management is incredible. And our goal is to get loans done. Our back office is amazing.
Underwriters.
Underwriters,
I
processors.
love the underwriters.
It comes from, I guess it's a whole collaboration of things. Processing, underwriting, management, the loan officers. We cater to the realtors as far as getting stuff done on time. Really, it's a whole combination of things that we do.
Yeah, and that's a critical piece of my equation, because my job is always to keep pushing the transaction to get it closed. And I don't want people just laying around saying, manana, manana, manana. I don't want that. So when I call, I want an answer, but I don't have to call because you're usually one step ahead of me.
Absolutely, and the nice thing too is our loan officers, with their experience, they with vast majority of experience, we know how to structure a deal. That's a big thing.
Oh, yeah.
I mean, it's
Absolutely.
a really big thing as far as structuring a deal correctly, and then just staying in constant communication. I think that's the most important.
Absolutely.
Yeah. Not every deal is going to be perfect. There's going to be deals that what appears at the pre-approval stage doesn't appear at the whether
Underwriting stage, yeah.
underwriting stage, and and in those cases we find a way to make it work, and we're always in communication with the agents, with the attorneys, with everyone involved with the process.
And I can speak to that. Yeah.
Well, go ahead.
They're always very, very communicative. And as I mentioned before the podcast, I had a deal a couple of years ago. It was a client that was using a VA mortgage, and she chose to go use Premium, and it closed in 45 days.
Well, they're like the patron saints of.
They are, because the owner is a vet himself.
Right.
Absolutely, Mike is
Mike-
a veteran.
You know what? It's interesting how they say the fish rots from the head down. That was what's his name? The guy that ran for president in the tank there. I can't think of his name right now. Years ago, was terrible slogan for him to come up with.
Yeah.
But yeah, so if you have a good leader at the top, everything else usually falls into place
Yes.
too. And he is a wonderful ambassador for all the veterans and the veterans programs that are out there. Thank God for him, actually.
Yeah.
It's just a wonderful program. I have a wonderful story that fits into what you're talking about. I had a guy he got pre-approved to a wonderful bank, a smaller regional bank up here, and I have nothing but praise for these people. Great mortgage loan officer, and she put him in an FHA deal. He kept losing out on offers, and he said, you know what, is there any way I can get around this, because I'm tired of losing a sale over 3 effing letters.
Yeah.
And I said, well, let me call my friends at Premium. They said, oh yeah, we can do this. They got him in for, instead of 3.5% down, they got him at 3% down conventional. Bing, bang, boom, he's a homeowner. Happy as a clam.
Now you're
Closed.
competing against the conventional.
And he was able to get in,
Yeah.
just with the eliminating 3 letters. FHA mortgage is a wonderful mortgage, but you know, it wasn't working for him.
Yeah.
And there's also what things we can look at as far as what someone qualifies for. We have 3% down conventional mortgages. We also have 3% down programs for first-time home buyers.
That's what he was. He was 3% first-time homebuyer.
We have what's called a Freddie Mac Home Possible and a Fannie Mae Home Ready program with 3% down, reduced mortgage insurance, reduced costs on the whole thing. So which could compare to an FHA, and a lot of times it's a lot better. So
Yeah, with the reduced mortgage interest, that's really
Right.
huge. Wow.
We're seeing a lot of cash transactions. Percentage of cash transactions, I've heard anywhere from 20 to 35%. Is that true? These days?
Of all the deals,
Of
it
all the
sounds
deals?
about right.
Yeah.
I haven't
Is that what
seen
you're
the statistic, but
I would say probably 20%.
Okay,
Yeah.
so 80% or
I-
more might be mortgages. What's the number one question you get asked on a regular basis?
As far as
About anything.
About anything?
and somebody calls you, what do they usually ask you? What are the rates going to do?
What are the rates?
Right?
It was, he thought it was a trick question, but you know that.
It's
We all get it.
Brendan,
Please, you're killing me, the rates.
my first call from a customer is usually someone referred them over to me, and they're looking to get pre-approved.
Yeah, gotcha.
And I will say this, the number one question, I've been doing this for almost 25 years now. The first thing a customer always asks, or a buyer, repeat buyer, or first time buyer, what are your rates?
Yep.
What are your rates? And a lot of times it is a lot more than just the mortgage rate. I mean, the biggest thing is there's a total cost to get into a house. There's your down payment, there's your closing costs, there's your escrow, that's your first year of taxes and insurance. There's costs that go into that, and a lot of times anyone can spit out a rate. I could tell you we're at 5.5%, but you're going to be paying points to get that 5.5%. So that's the biggest thing. You got to get through that obstacle. It's always the first thing people always seem to ask is rate.
And because of the truth in lending laws, you have to disclose all those things.
Right, and a lot of times at the pre-approval stage, customers don't understand that. They'll see a rate on your pre-approval, they'll think that's the rate.
Yeah.
Never the case. And I always tell people, if they're shopping me, if they're coming from another lender and they quote you a lower rate or whatever the deal is, to get an estimate from that lender, let us take a look at it.
Yeah.
Because a lot of times it's not about rate.
Yeah, absolutely. Yeah, because credit score affects that, right? I mean, a lot of
There's a lot of things that affect
Oh,
rate.
there's so many things. And one of the things that I'll typically ask on a first conversation is, have you been pre-approved by a lender? And sometimes they'll say yes, more times than not they say no. And that gives you a different starting point. But when they say yes, I'll always ask with whom? And they'll mention some online lender. And I say, listen, you know what? As much as that might sound like a really good, they gave me a really good deal. I said, you know what? Can I direct you to someone that's a good local lender? Because I'm all about working with local, because not only do you know the shorthand of the market, but typically one of the things that I see is, especially with the online lenders, their closing costs are almost never right. Almost never.
No.
Because typically they won't include the taxes that are going to be escrowed. And the taxes here, that's a big factor. If I'm buying a $400,000 house in Tonawanda, my payment is very different from a same price house in the city.
it's about $1,000 more a month.
That's a lot of money.
Yeah.
It's $12,000 a year based
Yeah.
on that calculation.
Yeah.
So they usually don't include that. And many times, this which gives me highs, they don't even run the credit.
Yeah.
Really?
No, I mean, I've received letters in the mail that says you're approved to XYZ, and I didn't even do anything. So, you know, a lot of the times they don't hold a lot of weight, especially if you're a real estate agent. And, you know, I've dealt with several even New York City lenders. It's still the state of New York, but it's New York City, and I have yet to have one of those deals close on time.
The rule of thumb, whether it's a lawyer, whether it's a real estate agent, whether it's a mortgage guy, good local.
Yep.
Good local.
Good with a good name, right? Like Premium has a great name.
I will say this though about Premium Mortgage. You asked why we're the #1 lender. Our pre-approval is considered the gold standard.
Gold.
Yeah,
And why that is and I'm pretty new to Premium, been in the business for a long time. But what I have, when we do a pre-approval at Premium, we're checking all 3 credit scores. We verify income. We verify assets. I mean, those are the 3 things we use to qualify a person: credit, assets, and debt to income ratio. We verify everything. We run it through our automated underwriting, basically our online engine through Fannie Mae and Freddie Mac, and then we issue that pre-approval. So I mean, we vet all our customers.
And that's really a pre-qualification, right? Because you've actually done the work, or is
It's
it
a pre-approval.
Yeah. Okay.
Yeah, so we basically, I mean, we do all the work up front.
Yep.
And with our technology, we have amazing technology that makes it so easy for a borrower. I can email you a link, have an interview with the customer, they'll send something over, and then they can upload all their pay stubs, assets, bank statements, everything we need to get someone pre-approved. And they can do that from their iPhone. We'll take pictures. And we won't need that for actual work, but just to verify everything. Yeah.
And then I like how your pre-approvals, they're in the system, so for my individual clients, I can go in there, and if they're putting offers in on multiple houses, I can adjust the taxes and things that will, there's a ceiling, and it'll it won't let you go higher than they're able, but I can still tailor a pre-approval letter for a specific deal or a specific house.
We have the technology Lender Logics. Basically what that is exactly what you talked about. So when we pre-approve someone as a loan officer, I'll set a maximum amount a customer qualifies for. I'll set a maximum amount they have in the bank. We send that link to the customer and to the agent. The agent gets it too. And they can run different scenarios, print their own pre-quals.
Yeah, that's awesome on the fly when you need it.
So it's really great on the fly. So if it's a Sunday night and you know offers are being accepted, and you need to change that pre-qual, as long as it's within those parameters, the customer and the realtor can adjust that. So I mean, it's amazing technology.
It really is.
It really is.
Very beneficial when you're in a competitive situation.
And that happens a lot.
Yep.
And the loan officer sets the pre-approval. And the thing about that is, let's say I pre-approve it for $400,000 with a max payment of $3,000 a month. The customer won't be able to generate a pre-approval if that payment's $3,200.
Yeah.
So
there's ceilings.
It keeps everyone honest.
And so we set the boundaries as a loan officer when we issue those pre-approvals.
That's great.
Which is really, really nice.
All right, and keeping consistent with our theme here, we want to tell the real story. If you noticed, our friend here, Mr. Gonzalez, did not answer our question. He wiggled out when I said, so what's the rate? Well, you know, it's blah, 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 blah. I want to get a rate. Just ballpark me a rate. Are they under 7 or over 7?
I would say on any given day between 6.5 and 7.
Okay. Let me ask you about credit scores. We hear all kinds of things. I can't buy a house unless I have a 700 credit score. True?
False.
Can't buy a house unless I have a 650 credit score.
False.
Can't buy a house unless I have a 600 credit score.
It depends on a certain situation, but yes.
I can.
They still can under certain situations.
Okay.
So there's options.
There are
So
options.
there's lots of options out there. If somebody really wants to get something done, I'm convinced there's more than one way to get it done. You may have to go around, but we can figure that out. And that's why you come to an expert, because they can usually figure things out. Every once in a while, you probably run into, and it's like they don't have jobs, they don't have money.
Right.
They're basically what we call lepers. But you say, okay, well, you need to do this, this, and this, and maybe in a year you can buy.
Exactly. Well, I'm sorry to interrupt you.
And then you coach them through that. Okay.
Exactly. What we'll do is, if I have a customer that comes in and they don't qualify, we'll put them on a path.
Put them on a path.
You need to do this with your credit. Not everyone's going to qualify. And a lot of times there's 3 things we look at. We look at job history, we look at your income, and we look at what kind of money you have saved. In certain situations with the money, there's grants and that available.
A lot of grants out there.
So I think the most important thing would be to, if you don't feel you qualify, if you've been renting for a long time, talk to the loan officer. See where you're at. A lot of times you'll be surprised. You might end up with a mortgage payment the same or less than what you're paying in rent right now. Because I know rents have skyrocketed. So.
Rents are going up faster than sale prices, and sale prices are going up fast.
Yeah.
It's just amazing. I mean, you know, people talk about why they got in the real estate business. My primary reason for being in the business is that I experienced the American dream, and I want everyone to experience the American dream. I really do. I'm like obsessed with it. If you're renting, my mission is to make you stop being a renter. I even tell my tenants that. I said, listen, you can stay here forever, but I'd be a bad guy if I didn't tell you to go out and buy something. You don't have to buy it from me, but I'd be a bad guy if I didn't tell you that.
Build equity.
Build some equity, man. It's ridiculous if you don't. And you know, it's amazing how fast the time goes. If you put somebody on a path and they have to wait a year, we're already almost finished with the second month of 25. So time goes really fast.
Yes.
Time is flying.
Time is flying. You know, you think that, well, it's a 30-year mortgage. Believe me, 30 years goes faster than you can think. And most people don't pay over 30-year mortgage. They pay over 11, 7, depending on where it is.
Okay.
I would say the average life of about 30 years, probably 6 years,
Yeah.
6.5. So
It used to be 11.
Was that before refi or?
I mean, the funny thing is I mean, I go from personal experience. We bought our home in 08. Rates dropped 1.5 points. We refinanced in 3 years. And we ended up doing some work to the property. So we did a rehab loan, and then we refinanced that. So,
Okay.
you know, just from a personal experience, I mean, that someone who's worried about rate now, I wouldn't, because one, you're going to gain equity in the property, so the values are going to go up.
It becomes almost a dog-ass argument, frankly. I mean, I've told the story. I bought it 14.5. I was delighted to get it. Delighted.
14.5%.
Crazy. I was selling houses at 18%. The rate had almost nothing to do with my success. If you needed a place, it was the cost of doing business, and everyone refied.
You're going to refi, you're going to sell the home and upgrade.
And you guys handle refis as well?
We do.
Okay, great. Do you have to be an existing customer?
No, you do not.
Oh, great. Okay.
So, yeah.
Great.
We actually have a buy now, refinance later program.
Okay.
Where basically if you close, you need to make 12 consecutive payments. And after those 12 consecutive payments, we'll refinance you to the market rate, and then you'll save the origination fee, save the appraisal fee. We'll waive a lot of fees on that.
So it's not double the closing costs.
It's not double the closing costs, it's reduced closing costs. So that's something we do in premium.
That's great.
I heard an expression, I thought it was very cute. You date the rate,
Yeah.
but you marry the house.
Yeah.
Exactly.
Heard that on a radio show in the mornings.
No, but it's true. I mean, the rate is interesting information.
We mentioned though, if you're sitting on the fence and you're waiting for the rate to go down, the houses in our market appreciated almost 8.5% last year. So that if you wait 2 years, 3 years, you're just adding tens of thousands of dollars.
Did not catch that train.
Yeah.
That train pulled out, and you're waving goodbye.
So you're paying 7% or 6.5% or whatever the rate is now, and you wait, and in a year that same house is up 50,000.
Correct. Exactly.
So
now
what
you're
really
financing
saving?
more.
And you're financing more.
Yep. So it doesn't really matter. If you can do it, get on it.
Yeah, one of my tenants who I shamed into buying a house last year, and he's
The real story.
Thank God he did, because today he would not be able to qualify for it.
Wow.
But he bought it. It's worth $50,000 more. Plus, he's got his tax deductions now for his mortgage and his interest that he paid and all this stuff. I said, man, wait till you get your tax return done. Boy, you're really gonna love me. You're gonna name your firstborn child there.
You're gonna start having money back at the end of the year.
All right, and it's time for our 2-minute drill.
All right.
We're gonna leave you with some really important information from our special guest who dropped in today, Mike Kozlowski from Premium Mortgage. If you had one pro tip of the week, uno, what would it be?
I would say what we just talked about, honestly. I would say if you're renting, take a look at owning a property. I mean, there's so much out there, especially for first-time home buyers.
Even if you don't think you can do it, right?
Even if you don't think you can do it, if you're on a salary, or if you've been working the same job for 2 years, if you have a 2-year job history and you've been renting for 2 years, I would say talk to a loan officer. If you're short on funds, like I said, there's grants available, there's stuff available for people. When you rent, you're basically throwing the money away.
Yep.
Absolutely
really
thrown away. On a short-term basis, maybe, but you hear about people that do it all their lives. What are you doing?
Yeah.
What are you doing?
I have a family member that's doing that.
It's a headset. Well, you got the headaches anyway.
Exactly.
Through the years, I've noticed a lot of people were so surprised that they actually qualified for a mortgage. It's the old adage is people always thought you needed 20% down.
Yes. Yep. So
Which you don't need 20% down. First-time home buyer programs are 3% down. There's rural housing and VA loans out there for veterans at 100% financing.
Yeah. So no money down.
No money down. I mean, you're always going to have closing costs, but I mean, it's a lot less than a lot of people think. So
yeah, it's a lot more doable than you think it is. I
really is.
I thank God for the first real estate agent that I met that sold me my first house, because I wasn't even, it was so far on the list of things I could do. I was looking to rent an apartment. And she said, sit down, Sonny. Let me show you how this works. Thank God for her. All right, that's it for us this week. Any final words?
Yep. No, thank you for tuning in. Please like, follow, share, comment to our podcast, and episode 9.
And thank you for tuning in. I love you, man. And thank you.
Thank you.
You are the man. Michael
I appreciate you.
Kozlowski
Thank
from
you.
Premium. We're out.